All right, record. Good evening, everybody. March 26th, 2017, Sunday. Hope everybody's doing okay. Welcome back, team, man. It's been 2 weeks, man. I really apologize, guys. Man, let's hope this makes up for it, though. All right? So let's start. All right. So I set up a PowerPoint. Yes, I wanted to be really organized so you guys can take pictures. You guys can write notes, so you won't just hear me babble the whole time. All right. All right, let's begin. Let's go with the slide. All right, straightaway trades. As you can see, these are all straightaway trades. They look clean. They look clean. They work. They work. They work. All right. Just giving you a small demonstration of them. All right. Whose mic is that, man? Seriously. Don't want to start wasting time on that. Okay, so, it works. So let's go to the next one. Larkin, just because it's you, next time you're out, bro. Just because it's you, man. All right, let's go on. This is the first trade, the 800 bounce trade. All right. Peak formation high or low must first be identified. All right. This trade can be taken in confluence with other signals, which I'll show you in a bit. TDI crossing on this one is very important. All right, let's take a look. All right, so back in my other videos, there was some straightaways where they would just bounce off and they would go, okay? But most of the time, when the blueberry is at it, like in these examples, notice how they bounce off the blueberry railroad tracks and comes right back down. But notice that most of the time, the blueberry is close to the high or the low. All right, so here, come on, guys, seriously, man. Those mics off, man. Yeah, you're good. You're good, Steven. Everybody else, man, they should know better. All right, okay, so, right? So here, notice this, okay? Most of the time, they will bounce off the blueberry because it is such a strong resistance, such a strong support, okay? Make sure of that. All right, and then, damn. Guys, I might cancel this webinar, seriously. I gave out a 30-minute advance notice on this, the mics, seriously. Seriously. I think, hold on. Muchachos, yo di una advertencia hace media hora que nadie tuviera los micrófonos prendidos. Si escucho uno de ustedes de vuelta, los voy a cortar a todos de aquí de este webinar. A todos. All right, apologize, guys, man. This is really like stupid, man. Everybody should have mics cut off. They should know better. All right. Anyways. All right, bounce off the blueberry, okay? Notice that the high is here, right? Okay, they worked the high. They came in, right? This is the blue box, right? This is my blue box. They came in London. Cool. Okay, now notice this. Notice how this could have almost been a valid setup, but notice that it just struggled here, hanging around, right? And they extended the high, grabbed more orders, right? They did an extended hunt into the stop hunt box, and then bam. Railroad track pattern. TDI is already giving you an M. Bam, got him, right? If you line this up, this is right there. You want to wait for second entry, for the second candle for confirmation. Here, you got him right there, right? You took a little heat right there, but, trade still paid out, right? Bam, to the Mayo, right? And then they bounced again here. This is another pattern. I'm going to talk about this in the next one. Don't worry. But here's a 50 bounce, and bam. Plus like 100. I think this is GBP. But notice how the TDI in this one came important. Notice how they came here and they finished off the M structure, right? Can you notice the divergence? I don't know if Mark is in here. Mark, man, right? Divergence right there, baby, right? There's a divergence right there also. If you had, let's see, if you had the first entry, you could have had a higher stop loss. Yeah, exactly. Yeah, that's what I say, 23 pips. 23, because you know, you never know. They can actually, this, you could have technically taken this trade, Jesse, because this is the pattern that I teach, right? And the 3 candlestick variation reversal pattern, TDI coming in, right? You could have took a little bit of heat, maybe -8 pips, but you know, this tells you, oh, hey, railroad tracks of the blueberry, possibly enter another trade right there. The TDI comes in, bam, you got them. So you're like, okay, now I can double my, maybe, you know, add another entry there, blah, blah, and then bam, got them. All right. And then, which I'll talk about this in a bit, but don't worry. You could have had a second entry here, right? 9 a.m. shadow box. Well, in our time, Central time, CC and everybody in Central, right? 9 a.m. shadow box, right? Here, now notice that TDI doesn't really give you the thing, but notice that this 1, 2, right? 2 pushes, right? 1 push, 2 push. Here gives you only 2 pushes, right? So, well, I'll talk about this in a bit, but this is the bounce that I want you to understand, that most of the time, if you notice that when a pair is dropping, and then out of nowhere, the blueberry is like right there, that's the next support, it usually does a small W and it corrects. Why? Because that is a major moving average, all right? Yeah, insane risk reward on that trade. Let's see. Blue trade. Could it be, question, could it be that it could make another level? Now, Jose, it could be, but you have to look at the candlestick pattern and forget. Really, look, keep in mind that I'm not counting the levels here. I'm not counting how many waves are there, none of that. I'm just looking at the high and the blueberry right now and what price is telling me what to do. All right. So here, this is what it's telling me to do, or what it's showing me. They have to show us something. Okay. So here now, Jose, now this could have possibly been another level, but you have to keep in mind the stop. Look at the stop hunt boxes right here, right? This is the box that you have on your charts. This is a 50 pip stop hunt box, right? So that's the purpose of it. If they come and do this pattern and just F the levels in this case, man, you got them. You got them. You take it. Took a little heat right there, right? And then bam, to the mayo. Okay. Let's see. Question. I think there's another one question. There's another question. Let's see. So I hope you understand, Jose. I'm sorry. I don't want to say it all in Spanish because this is going to be for the advanced course. So it has to be in pure English. All right. So sorry about that, guys. All right. And then another reversal railroad pattern. Exactly. Yeah, it's a very, very strong resistance support area. All right, next picture. And also, yeah, exactly. See how it has a confluence with the HOD, right? So, okay, next one. All right, blueberries right there. You know this is a downtrend, right? Because blueberries just hanging around there, right? Okay, Asian, right? TDI is tight. And then, bam, right at New York, they do a sharp move. See how the RSI catches that stop hunt? So price goes with it. TDI doesn't fall for it, excuse me. Now, this is a huge candle. So what I would do, or what I would want you to do if this was your situation, I would definitely, right? Remember what I talked about last time. 1/2 to 1/3 of the pullback. All right. This kind of, let's see. Question. Is because sometimes those patterns, it respects them. Yeah, I understand, Jose, but you have to understand that the most powerful thing in Forex overall, any strategy, any method, everything, it's the price, the candlesticks, the line chart, whatever you use. But price is king no matter what. But of course, what makes up the pattern is price, right? So, but the pattern is, I don't know if you understand me, but the pattern is in price is in pattern. All right. So that's all we need to use. I tell my English students to not worry about the levels so much because it drives them crazy because they keep thinking, oh man, I'm a counter trend trade here. Oh, you know, I don't want to do this. It messes with your mind. So I don't want you to worry about levels right now. And yes, they sometimes respect the levels. Sometimes they don't. All right. That's why they're called market makers. That's why they run things here. All right. All right. Anyways, back here. Okay, so wait for 1/2, 1/3, right? They gave, later on, I'll show you how to put on sell limits. I'm sure you know how to do them, but I don't want to talk about that right now because I don't teach pendings, but it would be an addition after you learn that advanced. Okay, I'll go over all the final finesses of the method later on, but for now, it would be, you would wait about 30 minutes, maybe 45, wait for a little right there, bam, hammer, bam, got him right there, bam, got him to, this is, I think, like the M1 or something, M1 pivot to profit, right? 3 candlestick reversal pattern. This is definitely your exit, right? Exit, 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 or TDI. If you don't know the candlestick pattern, TDI is way out. It's coming back in, is your time to exit. Okay. So notice here, very important on the bounce. Confluence with the HOD. Confluence. All right. These are the confluences you want to look at when taking these trades. Okay. All right. Let's go to the next slide. All right. Another one, right? Another one. All right. Right here, USD CAD. Okay. This is just a little M on the Mayo. Okay. Bam, bam. All right. Railroad tracks come in, railroad tracks again come in, right? They do another high test candle, railroad tracks again, and then they just hang around. Now, is the trade valid? Possibly, yes, it is. It could be. You could have taken it right here, right? TDI is coming in, bam, crosses finally, right? This is a downtrend, right? This is a downtrend, okay? Notice how the bands are tight, really tight together because they're going to eventually come here into this and widen up and price will start falling through the ground. All right. You could have taken it 2 hours past. You would have been that maybe -1 or +1, whatever. Not bad. All right. Because you're looking for the highest possible setups. Okay. Yeah. I'll post the recording, bro. I'll post the recording. Gotcha. Thank you, bro. Thank you. Just doing my job, bro. All right. Okay, so this could have been a trade, but scratched out, right? They don't always go our way, right? Correct. That's why we have a stop loss and such and such. All right, let's move on. That's why we wait for high possible setups only. Let me get this out of the way, guys. All right, the 200 bounce. Okay, peak formation high or low must first be identified. Please, 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 you must identify these. Also known to others as the stop hunt, hold the Mayo trade, SHHM, stop hunt, hold the Mayo. All right, TDI crossing on this trade is also very important. It will usually go to the 200 and trap. Remember, trap and then shift away. Nameable pattern must present itself on this trade in order to take. All right, let's take let me give you about 10 more seconds to write this down if you have to. Am I going too fast, guys? Quick question. Am I going too fast or is it okay? Is everybody okay? Everybody good? Everybody good? I'm good. Okay, everybody good. All right, let's say Jesse, CC, everybody okay? Danny? Okay, sweet. All right, sweet. All right, let's keep going. I'll have the chat box open, okay? Nameable pattern must present itself on this trade in order to take. I'll show the picture again because some of you guys are new and some of you guys missed the trade. So, the picture, so I'll share them again here. It's on this same PowerPoint, all right? So let's keep going. All right, get out. Let's go to the next one. Oops, go to the next slide. Oh, yeah, I got to keep this. All right, 200 bounce. Peak formation high is identified. Okay, it was an Asian session. Cool. Now notice this. Price came and did this. Railroad tracks to the Mayo. How is this? If you want to wait for the safest entry, I would say right here. Right there, baby. Right there. Right? TDI is coming in, bam, right there. Now notice that price didn't. Notice. Okay, look, this is how you use the TDI right there. And just in this case, peak formation high, right? Just look at it like price. Okay, right? just think of it like this, right? If you draw a line, it looks just like it, right? Now, the best entry would be, of course, if price would have gone to the market baseline and then came down. That would have been beautiful, but price only gave you this railroad tracks and then a confirmation candle, and then they finally crossed the red. Now, that would have been a safe entry, okay? Now, notice as soon as you got on, you're up maybe about plus 15 pips. This could have possibly been your take profit. Here's a trade I'll talk about later on, the one Jesse keeps bothering me about, okay? All right, so you could have held here. See, price just, moving averages just crossed. Confirmation that this may keep pushing down. You do not want to counter this. I know that the LOD is here. I know that. That's why price bounced off of that. But notice this consolidation over here, which I'll show you later on the next trade. All right, and then out of nowhere, bam, bam, and bam, broke right past all the freaking moving averages, just to prove to you, right? They do this, right? They do this on purpose for the people that buy that the moving average bounces, okay? They did an extended hunt, bam, TDI, bam, they came right back up. See how the blueberry is in effect, right? In this scenario, now they did an extended hunt and they came right back down to correct to end the session, right? Yeah, exactly. Intraday, yeah, it was a second drop, right? You can count them like this. You could, oops, let me get this out. All right, you can probably be like, okay, so this is peak formation high. Let me change to blue. Blue, okay, right? That could be your 1. This could be your 2. And then this could be possibly your third push right there. And then maybe you could say here's a 4, but, just intraday, you know where this is going, all right? Definitely when you know where the peak is locked, you know that you can hold this for me at least possibly the whole end of the session without worrying of this hitting your stop loss or anything. All right. This is how you see how that trap move right there to the Mayo confirmation get in. All right. Next one. Okay. Stop hunt high, hold the Mayo, right? This is a downtrend, right? Price possibly going like this. And then as time has been, price has been consolidating, the blueberry just starts going sideways. All right, when it starts going sideways, I told you guys that this is when a lot of the also JADO trading comes in. I know I said it's level 3, but you can kind of technically say this is kind of like a JADO trade in here too. You start noticing price will start doing this. GJ, if you look at GJ like 2 weeks ago, it was just up and down, M's and W's, like crazy. All right. All right, so stop on hold the Mayo. Watch this, okay? Watch this. Okay, it came in here, did this. They hit the blueberry, right? Blueberry is a strong resistance, I said, right? Okay, they did it, but you could have took a trade here at this second, okay? Because we're looking for shorts, right? We're looking for shorts. Keep in mind that I don't know where we're at in the cycle. I just know that it is a downtrend. Because Mayo is going like this. Blueberries, follows, okay? I don't know any of that. Okay, so I took an M. You could have possibly taken this, but we're not talking about that right now. We're talking about the bounce here. Let's see. And this M, how come it went up instead of down? Okay, good question. So this was a technical valid entry, but that is why you have a stop loss. That is why you have a stop loss. Seriously, like I can't explain it more than enough. I mean, right? It did the perfect candlestick the pattern, and then the M on the TDI, right? And then entry right there, you're up +5. You have your stop loss right there, or somewhere right there. Next thing you know, you get stopped out, or whatever, +2, -3, whatever, right? But then they come and do this, right? Remember what I said. If they come and do another M in front of your freaking face after you got stopped out the first time, don't be scared. Please don't be scared. All right? They did a monster move, an extended hunt. Monster move right there, right? And then huge railroad track come right back in. And then again, hang around and play around. And then finally, bam, confirmation candle right there. Confirmation candle, I know it's a little big, but you would have been already +8. All this right here, all this an hour and 15 minutes plus 8, around plus 9, plus 10. Okay, so that would have been a secure trade. You could have possibly thrown in like five lots on that right there for about 10 pips, maybe. Worst case scenario, 5 or whatever. All right, but that's what I mean here. Okay, stop on high, hold the Mayo. It held, right? It held. The Mayo held, right? And then TDI showing you what? 3 hits. 3 hits at the 72 price line, which later on I'll tell you what this is, but 72 area, and then bam, then it finally shifted down. See how the TDI doesn't fall for that move either. Notice that it doesn't go past, like, right? You see that, right? It doesn't go like, oh man, you see how price does all the way over here and price is right here, but the TDI doesn't even go like that. It just stays right here because they know the TDI caught that it was just the extended stop hunt. Okay. All right. So, you know, did the M structure and finally they corrected. All right, let's see what what they're saying. Yeah, so Jose, pretty much exactly. That's why you have to use the TDI, right? That's why I said in the previous slide, TDI is very important when taking these trades, because if you look at price and you ignore the TDI, you're like, oh man, damn, I'm missing the move. Like it just broke through the average, and then this railroad track right here convinces you that, man, this is just a pullback to keep rising. I mean, whoever has done that before, and you're like, oh man, peak formation here is low. Peak formation low is right here. This is just a pullback, and then, you know, it hanging around, and then you're like, oh, it's going. Ah, I'm gonna draw that. Oh, it's going, and then next thing you know, you slowly start losing. You're like, damn it, I got the wrong trade today, right? Excuse me, drinking some cantaloupe juice. It's pretty good. But seriously, I don't want you to do that. That's why TDI is crucial, very, very crucial. All right? Right? It didn't always remember this. TDI didn't fall for it. Didn't fall for that. Price is showing you this is a false move. Okay? All right, next picture. Next picture. All right. Bam, bam. Asian accumulation. The pattern from Steve Morrow from like 2002, right? M formation. This is self-explanatory. Stop on high, hold the Mayo. This is so beautiful. Bam, right there. Hammers. TDI, beautiful M, and then right before news release, bam. Right, W at the blueberry and correct back into the range. Beautiful stuff right there. Stop on hold the Mayo trade. Where is a good entry? Remember the previous 8. A good M or W consists of 8 or more bars. So 1, 2, 3, 4, 5, 6, 7, about 20. About, I don't know, 15 maybe. If you count that, just let me know. About 15, 20 candles. Right here, beautiful M. Hammers, hammers, hammers. Right before the news release. Sorry about your luck. And sips his Diet Coke, right? So W again, right, Jose? Strong resistance, support, excuse me. Cut the low and then come right back up. TDI is way out the bands. They had to correct. Okay, so this is really self-explanatory. This says in the 2 hours of the extended hunt, you get scared and you close the trade. Yeah, see, yeah, Guido Soto, exactly, bro. That's why it's important to have your 2 hour timing. Okay, if 2 hours is here. Or if your 2 hours is here, just close, man. Close. You do not want to eat 50 minus pips, minus 50, right? Like on me, on that USD cat trade that we took with 20 lots, I scratched out at minus 5 pips. What the hell do I look like taking in minus 50 pips? That's like minus 10,000. Hell no. I mean, excuse me, like minus 1,000. No. All right. 2 hours. If more than 2 hours or your stop loss is hit or whatever, take it and forget about the trade and move on. All right. What trades do you I just usually trade right now. I'm trading just usually a little. I've been trading London more lately, but you can ask me that at the end. All right. So that's that for the 200 bounces. So I hope everybody understands. All right, TDI is very important on these. All right, next slide. Whew, man, this is going to be fun right here. The 50 bounce variations. All right. So there's 3 types of bounces for the 50. So I hope you're ready, Jesse, because I know you're going to like these. And after this one is going to be your favorite one. All right. So there's the 50-50 bounce. There's the 50-0-0-50 bounce, and there's the 50-50-50 bounce. And I'll show you all of these are all the trades that you see, like, damn, Cash, like, how the hell did I not catch that? Or damn, King, or damn, Oscar, how did you catch that? Those are the trades where you're going to learn today. All right. So I hope you guys are excited. Yeah. Yeah. So everybody's like, man, oh, Cash, damn, they're always killing it. And they're like, man, I see no M's and W's. How the hell is he profiting still? These are the trades that I take most often, because I've already mastered them. Here's the first one. Take a picture of it, write notes down or whatever. All right. The 50-50 trade rules. I actually posted it in the students, but I didn't go over it like I am right now. So let me read it real quick while you guys write this down, or take a picture of it, or screenshot it from your computer. All right. Same thing. Peak formation high or low must be identified. Excuse me. 13 in the 50 EMA or 250 must cross. All right. It's the first bounce off the 50 or 200. All right. Now it can be. I'll discuss this after. It can be like price can bounce here and then drop, and then later in London, like, and then they come and do it again. I'll tell you later on. There's going to be the do's and don'ts on these, so just focus right now on this, okay? There should be a pullback to the EMAs of about 25 pips, and price to move about 1 times ADR away from the peak formation. All right. So what he means by that, or what I mean by that, sorry, is that price has moved about 1 times ADR. And then, right, because of this cross right here where it's circled, usually it consists of a pullback. And this is the pullback that they're talking about. Okay, right here. All right. It's already written on, but see how it's labeled? Okay. These lines here, keep in mind, 100, 50, and 00000. These are your Asian fib extension lines for the Asian session, not fib the Fibonacci levels. No. These are the fib for the Asian session. Asian high, Asian middle, Asian low. Okay, see, this is 1 times ADR, right here. This is 1 times ADR. Okay, next night they come in late at London, and they do a candlestick pattern, railroad tracks at the 50. They're accumulating at the 50. TDI, you see how the TDI is doing an M? It does the pinch, right? Or the cross. Pinch, cross, whatever you want to call it. And it must close below the 13. What it means by that is that the red. Here, close the red, bam, entry. Bam, got him. So why is this a 50-50? Because it's a 50 bounce off the water and off the 50 fib of Asia. That's why it's called the 50-50. And it says, question, what do you mean? Why don't you take that as a peak formation high? What do you mean by that? I mean, I'm just specifically talking about the 50-50s right now. I know this is the peak formation high, and I know that can hold a trade from here. But I'm talking about, like, if you missed this whole move, if you missed this whole thing, and you're like, damn it, I missed this, man. And then you come at the next night and you see this setup. This is what I mean. This is when you can come in to your desktop and say, hey, man, this just looked like a 50-50. Let's take it, and then that's what I'm going over. Jose, I don't know if you definitely need to watch Andre's videos, bro. Peak formation, high, peak formation, low. You should already know that by now. But I can't discuss that right now because this is advanced. This is an advanced class right now, bro. Please, not being an a-hole or being a jerk, but seriously, like you should know what a peak formation high or low is right now by now. If you haven't, you need a lot of studying to do, bro. All right. All right. Anyways, let's go over here. All right. So this is what I mean. Does anybody have any questions on this right now? Anything that I just went over on the 50-50 only, not anything else, but I'm talking about this right now. Any questions on this right now? On the rules or anything? Everybody's okay? All right. Lit. So the first 50 is water and the okay. Yes, exactly. Fit that. Okay, yeah. So pretty much what is it? I forgot, but the numerator, denominator, I think that's how it goes. So there's a mathematician that can help me with this. The numerator is the water and the denominator is the fib. Okay, so this will always be the first. The first number will always be water. All right. So that's why it's called the 50 because it bounces off the water and it bounces off the 50 at the same time. The 50 extension of Asia or the middle. The middle of Asia is 50. The high of the Asia is 100 and the low of Asia is 00. I'll show you some pictures. All right, so don't worry about that. And it says, question, are those turned on or how do we turn them on? I'll show you. Don't worry about that, bro. I don't think that you have them. Like, you don't have them set up. Don't worry. I'll show them. All right. All right, let's get this out. Next one. All right, so I think this is like one of the most famous pictures I have. I think I have this in my Facebook cover photo, but so here's a perfect example of a 50-50. This is, yeah. Oh yeah. Thanks, bro. Thank you, bro. Yeah. Is it Steven, bro? When you start, if you go after this training, you're gonna start seeing them like a lot, bro. You're like, damn, like all these bounces happen a lot, man. Like you can become a millionaire off of these trades. Seriously, man. Seriously, just look at all the freaking profit I made at the bottom. Not showing off, but just not showing off. But seriously, like yeah, bro, that's a lot of bank. But okay, so here, right? I don't know why the hell I said 50-50 here, but okay, this was a bounce off the 50 shadow box. Okay, this is I could don't worry about this right here. This is later on. I could show you that, but here's a little M, but it's a little more risky, but same thing. But okay, here came in London. The excuse me, damn, blah, man. Okay, let me get this out. Okay, New York, right? False move for New York. Shadow box 9 a.m. our time, CC, and for everybody else on the central, right? Railroad tracks entry, bam, got him. TDI crossed in, bam, got him. Put in like 4 lots. Man, I freaking banked on this, but it's a beautiful trade. It's a beautiful trade, man, when you catch it. And I closed like right here. Excuse me. All right. Okay, next one. The 50-00-50 trade rules. Follow the trend. This is a continuation trade. There must be a visible stop hunt out of Asia. If the trend is up, they will stop hunt high. All right. Price must bounce off the 50 EMA 00 on the FIBO of Asia and the 50 on the TDI. If the trend is up, it will bounce off the top 00 line in the FIBO. I'll break that down right now. Once the TDI pinches and price closes past the 13 EMA, you have a bullish setup. All right. So I know that's a mouthful. So watch this. Let me break it down for you. Okay. So of course, first of all, you want to follow the trend, right? So Of course, you must identify peak formation. This is clearly an uptrend, right? Mayo's over here, blueberries like somewhere around here, right? Okay. Okay. Accumulation. They come in here. You guys know why this move exists. Breakout traders, right? My breakout traders right here get stopped out, confused, railroad tracks, bam, got them. Okay. So the TDIs consists of 50, 23, and about 4 and 72. These are and 80. I think it's 80 or 72. There's just 72 in there, but the 50 line is like right in the middle. I really don't use the numbers, but if you're a person that wants for extra confirmations, confluence, yes, you can go ahead. I know it says, and the 50 on the TDI, yeah, it is important, but I think what's more important is what price is showing you here. So, but definitely you want to listen to everything that says here. Price must bounce off the 50 EMA. Okay. All right, let's go here. Breakout traders, okay, accumulation. Notice that it's bouncing off the 00 line, the 00. Okay, I know I'm about to have some questions on this. All right, so give me 1 sec. All right, let me explain this down, okay? Okay, railroad tracks to the ketchup plus the water, okay? They came in, and then you have a shift bar, bam. All right, so here is your entry. Okay, notice that it did a nice little W on the 00 fib. TDI finally pinched, right? It pinched. They gave you a nice W also, right? Breakout trader, stop hunt, and then they showed the true move right there. Bam, you got them. Here's your entry. Took a little heat over here, and then it paid out. It paid out big, 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 okay? So I know one of the first questions, Cash, but what the hell? Didn't you just say that this is the 100, this is the 50, and that this is the 00? Keep these switch over because this is a downtrend. So because this is an uptrend. So because this is an uptrend, this is your 00, your 50 will always be there, and 100. All right, so don't get them mixed up. When in an uptrend, this is 150 0. In a downtrend, 100 50 and 0. All right, so 50 entry. Came in, took a little heat, bam, got him. This is what a 50-50 trade looks like. All right, I think I have some more examples, better examples, so don't worry. Let's see. Okay, facts aren't showing up. Once the London is overdue, no, actually no. Just the picture, the one that I took earlier, Larkin, the one that I made like 4,000, that was New York. So okay, I know what you're saying. Okay, look. So if this is Asia, all right, let me get a. Okay, if this is Asia, bro, right? And then you see no move in London, like it's consolidating, and then next thing you know, for New York, right? They come and do this, it spiked, and they hit the 00. So just imagine that this whole thing is London, and then Asia's over here with the lines. Just imagine that, bro, all right? Just imagine that. New York is this, and they come and do this in New York, and they do the same thing. This is the same thing. Doesn't only apply for London. It can also be used for New York, bro, all right, to answer your question. So I hope I didn't confuse you. So, yes, you can use it for New York as well if they do this move, all right? All right, sweet. All right, I should have some of these examples. I better have some. Okay, perfect. Here's a perfect example. All right. Heck, there's 3 examples right here. All right. Definitely GBP USD, man. This, all right, beautiful M on the 50 bounce. Beautiful. All right, you see that? You see that, guys? It bounced off the middle. And TDI did a nice M on it too. It finally pinched, bam, got him. You could have took profit somewhere around here, whatever, okay? Then they came in again, railroad tracks, bam, got them. Again, they came, okay? See how many times this happens? Just imagine how much bank you can make, okay? London, they came in. There's no move here. There's a spicy ketchup trade over there. I'll show you later. Okay, pull back. New York, right? This is the answer to your questions, Larkin. Watch this. This is New York, bro. They came in false move. Railroad tracks off of the 50 of the fib of the middle of Asia, off of the water. Bam, got him right there, bro. My entry was right there. I think this is the one where I also banked. Yeah, right there. Okay. Got in at the confirmation. TDI is way out. Bam, got him, bro. So see how it also applies for New York as well, bro? Or in everybody. Okay, see how they can do this in London, but they come and do this in New York, you got them, man. Or they come and it's really, really, really rare for them to come all the way up here, but is it possible? Yes, it is. But most of the time, they only come to the 0 and to the 50. Most of the time, all right? Or sometimes they just straight drop, which sucks. Okay? This is a beautiful setup right there, bro. All right. Next one. All right. It says ignore. Yeah, ignore that. So like tonight, Jesse. This is the move for tonight. Ignore yesterday's fibs. Focus on the ones for today. Today, yeah, definitely. That's a good question. Focus on the recent fibs. Don't worry about the yesterday's, last week's. No. Like screw that. Go to the ones that are recent. To the one day today, for like today's Asian, tomorrow's Asian. You focus on that, okay? All right. And the last one. All right, the 50-50 trader. They didn't wait. Yeah, okay. Yeah. All right. Trade rules. Must follow the trend. This is also a continuation trade. Price must bounce off the 50 EMA, the 50% fib, and the TDI 50 at the same time. All right. Price must close back below the TDI, must pinch the nitrate distrade. So the 3 times ADR has been met. This means pretty much that if price has been if they've been blowing out the ADR for the past 3 days, don't take this trade. That's all it means. All right. That's just the safety measure right here. All right. All right. So same thing that I was just showing you for the 50-0-0 bounce, but this one comes to the 50 instead of over here. So instead of over here, they come here. Robo tracks. Okay, this is a downtrend. We're looking for continuation. Pinch. All right. TDI is right there at the 50 level too, if you want to use that. Pinch, entry, bam. And this is good. This is still good. Bam, then bam. And then, they did a shadow box. And you're like, man, you know what? I want to get out. Or whatever, okay? So sometimes, they're going to do this and not pay as much. Sometimes, man, you're going to bank like on that GU trade that I had, okay? But most of the time, you will be banking on these trades, okay? I'll talk about entries and exits later. All right, so don't worry about that. I'm just showing you this. So the same thing I just talked about in the previous. Let's look at some examples. All right. Okay. Right, consolidation, peak formation, definitely level 3, 50 bounce. Notice how they came in here to the 50, Fibo, bam, entry, or you could have waited for this one, bam, entry, and then you have a confirmation right there, shift candle, pull back, railroad tracks to the Ketchup, shift again, bam, plus 50, in and out like that, just like that, man, just like that, end of the day, go have some time with your family, all right? All right, spicy ketchup. This is a long webinar, guys, so hang tight. All right, I'm almost done, kind of, but hang in there. This is all important. This will definitely step your game up. Spicy ketchup. This is a trade I came up with. This is one of my personal favorites. One of my personal favorites, and I know Jesse knows that. All right, so there's a lot of rules to this one. please pay close attention. All right. So this is like I said, I came up with this trade So this is all the rules that I've learned this whole freaking month that I took trades and lost and this and why I lost and everything. Here it is. All right, so be ready. This move is carried out very often throughout the day, believe it or not. All right. So definitely you must identify the peak formation high or low. This applies all the time because you don't want to trade against a trend or, you know, like at this point, okay, we're already in advance, so we should know better, okay? No, yes, you can counter the trend, right? Because we know how to do it, but I'm just saying, like, for right now, like general purposes, right now, you know, we're focusing on following the trend, parentheses, okay? This trade consists of a trapping. Please, you have to, I don't know, man, highlight this. I don't know, put it up in your wall, you know, take a picture, frame it or something, but the trapping must exist. All right, I'll show you what I mean. The consists of a trapping to the 13 EMA to your Ketchup, the red moving average, okay? The trap move to the 13 EMA is very crucial. They must trap. If they do not trap, do not take the trade. Please do not. Nameable pattern must present itself in order to take the trade. And I'll show you all these. Don't worry. TDI crossing on these are not much necessary, but if it presents itself, it's just an extra confluence, an extra confirmation, okay? You really don't need the TDI on this one, all right? Never, please, Jesse, I know you're going to be curious, bro, but anybody, never take this trade near the HOD or LOD. Please, never take this trade near the HOD or the LOD. Like, seriously, never. All right? Take a picture of these. These are the patterns that you will be focusing on when taking this trade. Railroad tracks, the star formation, and the cow. Okay? If you don't have a picture of this, take a picture, screenshot it, do what you gotta do. That give you about 20 seconds. All right, railroad track. Oops. Okay. Railroad track, star pattern, cow, and the law. All right, about 5 more seconds. Don't worry about this, all right? So just focus on these right here. All right, let's move on. Okay. This is a picture from about 6 years ago. All right, I always have these just to prove to you that I'm not a freaking maniac that just makes up crap. All right, peak formation high, but definitely this is my variation of what they, you know, what my mentor taught me. All right, this is my own style. This is my own trade that I came up with. So spicy ketchup. Notice this. Okay, prices coming down. They come in, false move for New York. Notice the trapping. They trapped. Railroad tracks trapped, and entry is right there. Entry is right there. Shadow box came in. Notice how the TDI in this case came in handy. Bam, got him. Bam. See how they do not come close to the water. They're not even close to the mayo. This is where you will be banking also with me on these trades. All right, railroad tracks, they trapped entry. They have to trap. They have to make this move. They have to show you that they are trapping. What I mean by that is that they're grabbing you and showing you a false move against your true intentions. That's what I mean by trapping, okay, to break it down. They must trap, all right? Entry's right there. You know, you could have took a little heat right there, entry, okay? You could have exited here at plus 20 at the consolidation, right? Price consolidation, you can exit. This is already a lot of pips over here. I think this is, euro. This is about 20. That's okay. All right. Picture from 6 years ago. Okay. Came in. M at the, you know, I know that the mayo and water were here, but that's just an extra confluence. So that would have been fine too. Entry, bam, broke past the blueberry. They had to correct, and they did. All right. Hammer, okay, but this is, you know, this is a hammer right there. Entry, spicy ketchup right here again. At the railroad tracks, pull back right there. Entry about plus 15. In and out, good. In and out, just like that. Okay. Question. So it's basically a trap move on the ketchup, and if they provide us with a candlestick pattern for reversal, we take it. Yes, you want to take it. Don't worry, I'll go over that, bro. Just bear with me, all right? I'll show you what not to do and what you should do on these, so don't worry about that, all right? I got your question on check, though, all right? But yeah, definitely, if they showing you a trap move in the proper area or the proper market area, then yes, you take, all right? I'll show you when not to take the averages and stuff like that in a bit. All right, next one, okay? Spicy ketchup trades. All of these are all mine, of course. Spicy, you see how spicy ketchup, you see how they trapped? This is very, very important. Trap, bam, entry, got them, okay? JPN, ECN, the same, this is a index. Same thing, guys, same thing. They show, this is exists. This is beautiful, man. 3 candlestick star formation right there. You know, this could have been your second entry, but I got in right here. They did the little gap and they closed. Railroad tracks, I got in right there. And then bam, this definitely paid out big. Same thing again, okay? Came in, trapped to the ketchup. Bam, got him. Excuse me. Got him, bro. Got him, girls. Sorry, there's another girls in here. Got him. These are all spices. Spices. All right. All right. I'm going to break this chart for you, so don't worry. Don't worry about all this. Okay. So by now, you should understand all of this, what I'm about to show you. This is definitely everything. I want to start seeing these type of things written on your charts from now on, hopefully. So, okay. Pins to the mayo. Entry. Okay, they came in, right? This is your peak formation high. Trap to the ketchup, spicy ketchup. Entry. Plus 35. Okay, excuse me. Yeah, plus 35 pips. Okay, this is for this entry right here, plus 35. From here, from the ketchup trade to the stop hunt, before the 3 candlestick pattern is 14 pips. You're out there. 3 CRP means 3 candlestick reversal pattern right there. You could have took an entry right there. 1, 2, 3 pushes. Okay. Came in, they consolidated, hang around. You got in right there at the M. Entry is early, but 2-hour rule is in play. Stop loss is over here. 3 hits to the water. Bam. It comes 40 pip drop. You're out right there. Okay. This is breaking it down right now. Breaking it down. This is what you want. I want to start seeing you guys. Right. Keep holding. Keep holding. Keep holding. Beautiful 3 hits right here. Beautiful hits right there. Keep holding. Breaks past the market baseline. Keep holding. This is what tells you not to close here. This is when it says, damn, should I close? Should I hold? What should I do? You hold, you wait. TDI just came in. Why the hell would you close? Get in an extra 15. You're out at the 40 pips. All right. Watch this. London, they come and trap railroads. Okay. Took a little heat right there. They came in. 2-hour rules in play here. All right, 2-hour rule, trap again, entry number 2, and then bam, dropped. Plus 20, exit. Definitely you want to exit right there. You exit, and then back to it again. And start looking for another pair or if whatever you are in. All right, so on and so forth. This is breaking it down right in a nutshell. All this numbers and letters that you see. All right. All right, continue. Okay, peak formation lows right there. This is the beautiful W that I talk about, that stupid little pattern I've shown you since you first met me. TDI is way at the zero price, 0.23, right? This is 00. Bam, got him. Plus 30 at the Mayo. Okay, breakout traders got trapped. Looking for long, safety 101. Okay, they came in. They came in again. EMA cross, looking for longs now. Peak looks established. Okay. Bam, 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 bam. Okay. Trap. Entry is right there. They trapped 3 candlestick reversal pattern right there. That's why I did this spicy ketchup trade. Okay. Took a little heat. 15, 30, 45, 1 hour. 1 hour and 15 minutes passed. Then you're up in profit. Right? This could have been your second entry. If you missed here, you're like, damn, I missed it. Damn, got an entry too. If you missed it, the first one over here, they pinned the blueberry, your exit right there, plus 15. These are, yes, I actually counted these. So believe me, plus 15, looking for longs only, unless they show us something else. Okay. All right. So there's no move here. There's nothing here. This is just a pullback from the peak formation, right? They must correct back to get your money, right? That's why they corrected back, all right? Don't try taking these in Asia. Now, I know sometimes they will work out, but as for learning purposes right now, don't take these in Asia. Once you're profitable and you're banking off of these, feel free to do whatever the hell you want. But right now, don't try to take these in Asia, please. Please. All right? Next one. Spicy ketchup continued. Okay, this is the same pair from following from the next night. Remember that they pinned the blueberry. Okay, this is the same chart, but we're looking at if it's two hits to the HOD multi-session. Come on, remember I said like don't be scared to take counters. All right, like look at this. If the shift bar is too big, same thing. Wait for 1/3 or 1/2 of the pullback. They did. Entry right there, bam. 25 pips right there, 50 right here. You're out. Mayo or right here at the 50. If you said take profit. All right, 2 hits. HODs right here, confluence, bounce. Okay, TDI didn't fall for his way out. It's already falling. So that's another confirmation, okay? This cross means nothing until price does something. Railroad tracks on the Mayan water. Now we're up to something. All right. This is possibly right from here to all the way down there. This is a W, V, and then this could possibly be the next V that's setting up over here because we don't know this is going to happen, right? And then you come over here. So here's a bit more difficult, of course, but notice how if you would have held these, it would have been paid out glorious. Okay, entry is right there. Why? Because look at this. Kind of like you're squeezing something. When you're squeezing like this, it eventually pops like that, right? So and also look at price. It never even breaks. It doesn't break. It doesn't even touch the Mayo. And it starts going like this. You could have got an entry right there. Another one right there, or so on and so forth. I know the highest here. That's why this big move was right there. But notice that they don't come to the water at least. So you're definitely like, hey, hell no, we're looking for longs. All right. And then look, bam, plus 50. It eventually popped up. And then plus 50. All right. Next slide. All right. 3 candlestick reversal pattern on the ketchup. TDI was there to help us on this trade. Bam, got him. Over here about plus, it says 32. So average was maybe about 25 pips here. Okay, this is a safe entry. This is a safe entry right there. Trap, right? This is a safe entry because they came in and they did this, okay? TDI helped you confirm over here. Railroad tracks to the 5 EMA is still telling you that this entry here was not a late entry. This is a good trade. Trap. Reversal pattern. Trend is still strong. Look at this. It's still strong. 1, 2 pushes. 3. And then that's when they correct. Back in here. Somewhere around here. All right. Next slide. Entries and exits. All right. Yeah, I know this is a long webinar, guys, so hang tight, hang tight. A lot of knowledge, all right? Your entries and exits will be very important in all these straightaway trades. So your check down list, make sure you write these down. So first of all, you want to identify the peak. Number 2, enableable pattern must present itself. Number 3, TDI cross must happen in the 800 and the 200 stop on high hold the mayo and the 50 bounces, all of them, excluding spicy ketchup, okay? Number 4, wait for confirmation candles on all patterns, please. Now that you're learning these, please wait for confirmation. Number 5, if candle is too big, wait for 1/3 of the pullback of the candle or 1/2. All right. Enter the trade once you have your confirmations that you like and that you feel comfortable with. And number 7, exit at your nearest take profit, please. Pivot point, yesterday's low, yesterday's high, next EMA, etc., etc. Okay. What not to do. This is Jose. I told you I got you, bro. I told you. What not to do. Do not take the trade if the proper confirmations haven't come yet. Please. Don't say, oh, man, cash, it bounced off the moving average, but then it still went up. Why? Okay, I'll show you a perfect example of that in a bit, but please do not guess. Never take an EMA bounce near the HOD or LOD, please. So if the LOD is right here and there's a bounce like right there, like right here, if the EMA is like right here, please don't take that. I don't care if it even pays out, please don't take those. All right? Do not take an EMA bounce back into the trap zone. I'll show you an example of that right now. And don't expect these moves when the ADR was just filled last session. All right, so example. So for NFP, like let's say an NFP was on Monday, or a big move like that. Don't expect this to happen the next trading session. If they come and trap or something, and then you're like, man, what the hell? Why aren't they moving, or why? And they just sit there and consolidate at the moving average. The ADR was just filled yesterday, dude. Like, what the hell? Like, wait. You're not gonna, they're just not gonna be like, oh, I'm gonna just keep dropping just because of that. No, they have maybe other purposes that they need to fill, other cross pairs that they need to move or whatever. Come on, please don't expect these moves when the ADR was just filled last session. All right. All right, here's some examples that I was going to tell you. I lost a lot of money on this trade. But I told you guys, I promised you guys that I was back testing so much to know exactly what things happen. All right, check this out. I lost this trade. With my hard-earned money because I thought this was a 50 bounce. Now look at this. First of all, let's look at price. So what do we see here, guys? LOD and the ADR was filled, plus they just came back from the trap zone. This was just a 50-50 guess, right? And now that I effed up first, please, guys, never take these trades near the LOD, and don't ever take them. It's kind of like any of you guys watch soccer or basketball? Any of you guys your coaches be like, hey, don't pass it. Like when the defense just got hurt, they almost got scored on. And then the coach is like, hey, don't ever pass the ball to the middle because that's where the other opponents are usually at. And that's the first thing you freaking do. And the opponent grabs it and they score. Right? I don't know. I hope this is a perfect analogy, but if you watch soccer, you know that this definitely helps. I don't know if in basketball this is the same, or in football you pass it right in the middle where they just threw the ball out away from that area, and you're coming right back in there like an idiot. Like, why the hell would you do that? You're trying to get it away from that area, right? So this is how it applies to the charts. Like like I took this and I'm like, oh, it's gonna pay out. And then next thing I get stopped out like minus $500. So this is when I'm like, damn, why would I trade back where they just finished trapping? This is the things that that makes us be like, man, you know what, Cassius' method is full of shit, or excuse the language, guys, but it's full of the blah blah. No, do not do these, guys. Please don't do the same mistakes that I've done. That's why I composed and took so freaking long to to get all this together. But you see how they did the perfect pattern railroad tracks, like this gets everyone excited. You're like, oh hell yeah, railroad tracks, and then this is a downtrend. Hell yeah, it's gonna pay out. No, it's not. It's not, because they just finished trapping from here. They just finished trapping. That's why this trade didn't pay out. Okay. Yeah, exactly. That huge move down. They just finished trapping on that bottom area, bro. And we don't want to come back down in there because, right, the dealer doesn't want to come back in there because they just grabbed all the freaking sellers at the bottom who sold. Exactly. They need to shift the zone and get the hell out of there. Exactly, bro. Exactly. All right. Okay, spicy ketchup. I lost this trade too. Can anybody tell me what do they see here? Why did I lose this trade? Okay, here's my entries right here. My entries are right here. Green. Oh, let me get this out because you might not know why I lost. Anybody want to take a guess at why I lost this trade? Let's see what the volunteers. Hey, thank you, Gustavo. Sí, exacto, gracias. Estaba cerca del LOD. It was close to the LOD. So what the hell happened? It did this, and then it did a big fat W, and I got freaking stopped out. But keep in mind that I was like, oh yeah, spicy ketchup trap move, star pattern, hell yeah. I went with full confidence, and then I get stopped out because I took this near the yesterday's low. Don't take these near the lows, guys. Near the lows, near the highs, please. All right. So I hope you guys understand now a little bit more on these and not make the same mistakes that I've been doing. All right. Yeah, what's up, bro? Speak to me, man. We got a question, guys, so let's give him a second. I see. Yeah. I see. I think this right here, right? Yeah, right here, right? Yeah. That is a spicy ketchup trade. Yes. You see how it's not neat. You see how this one paid out, but this one didn't. See how that the LOD is all the way over here and the HOD is over here. You see, right? You see the difference, though, right? Like you see how why one paid out and why another one didn't. Exactly. It's like away from everything. Like you know what I'm saying? Exactly, bro. Got it. Good eye, bro. Good eye. All right. Let's see what's next. Whew. Well, guys, congrats. You are now officially ready to destroy the 15-minute charts, man. I hope you guys learned from the mistakes that I've done. And you guys now understand all the freaking trades that I take when you guys are like, damn, like I see no setups today. But Cash is over here making 5,000. This is the trades that make me bank when I see no M's and W's. All right. Fun fact. You know about 70% of the system now. The 30% more, I will keep a secret until you guys get to there. All right. Yes, there's a little bit more dirty little secrets that I have hidden from you guys, but you guys will learn them in due time. Yeah, you guys know about 70% of it. Some of it is psychological, and some of it is some other stuff. You guys know about 70% with this, with the advance that you guys learned today. Thank you guys. Thank you everybody who stood here, and I hope you guys understood. I will post this only on the advanced. So if you're in the advanced, you guys are freaking lucky. For everybody who missed it that's in the basics, sorry guys, but you're gonna have to wait until you get to the advanced course, okay? Yeah, no problem, guys. No problem, Hector. Oh yeah, don't worry about it, Peter. Man, you have it. You're in that in my advanced course, bro. So it's gonna definitely be there 24/7. You know it, bro. All right, no problem, guys. I hope you guys learned, muchachos. Espero que ustedes aprendieron mucho hoy. All right. Yeah, no problem, guys. No problem. Yeah. This was so much effort. As you guys see, this webinar has been like an hour and 30 minutes. So, you guys know I put in a lot of work at this. I put so much love into this. Yeah, but man, beautiful profession to make money, man. Like, you go out there to the world and they be like, man, what do you do for a living, man? You're like, oh, I'm a trader. They look at you like, whoa, like, damn, really? You want to, what I'm saying? Like, those they make you feel good, bro, Yeah. All right, no problem. Thank you so much, Peter. Thank you, man. Thank you. Appreciate it, bro. Any other questions before we end this? Any other questions, guys, before we end? All right, looks like we're good. Okay, yes, so this will be an advanced course. And whoever's in my basics, Danny, one of my new students, bro. So when you finish your basics and the test, you will have access to this video and to the rest of the videos that I have there, which show a lot of variations on the theme and such. All right, bro, so hang tight. I hope this is a lot of knowledge that you have to process today, but I hope you kind of understood, bro, okay? And everybody else who just learned this, okay? Yeah, all right, guys, cool. So, guys, yeah, I want to recommend demoing. Yes, good point, Jesse. Thank you for pointing that out. Yeah, definitely. Thank you. You catch yourself witch in the bottom left with witch. Hey, I'm a witch now. Yeah, I was tired, bro, putting this. Okay, guys. Cool. So I'm going to let you guys go to bed. I know it's like 9 a.m. in some countries, 2 a.m. in like London. So I know you guys got to go to sleep. All right. Thank you, guys. Let's hope a great week. All right. Great week. And I'll be here for you guys if anything. All right. Peace, everybody. Much love. Good night, guys. Good night. Buenas noches, muchachos. Gracias a todos por estar aquí hoy. Gracias. Espero que todos aprendieron algo importante y que mejoren en sus tradings. Muchas gracias. Adiós. Goodbye, everybody. Peace. Love.